You're watching today's video technical update presented by FXTimes. It is Thursday, August 19th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. I will be using VT Traders, so please download this trading platform to follow along. US dollar crosses are still trading in a consolidation mode. We can see that in the euro dollar and pound dollar charts. The US dollar Japanese yen also shows it is not ready to rally. The Aussie US dollar pair, however, showed some weakness in the Australian currency. Today's commodity currency weakness can also be seen in the Canadian Japanese pair. This video is being produced at about 1:15 p.m. Eastern Time during the US trading session. Starting with the euro dollar, so we are going to stalk this decline as we may be in the fourth wave. So within this fourth wave, let's take a look at how the market's developing. We know that it shouldn't go below 1.2450, preferably above 1.25. Euro dollar in the 4-hour time frame. So here we had this impulse wave down. Not sure if this is wave 5 has completed. I prefer the count that we're still in wave 4 of this impulse wave down, which is your wave A of wave 4. Okay, so back here, your wave A of wave 4 may not have completed yet. We may have this another decline down here to complete A, or we already completed A and we are in B. Okay, and B, I projected it towards 1.30. There's still a chance to rally towards that. So if that's the case, we have our C wave down, which should be an impulse wave. Otherwise, at the moment, if this wave A is here, then we should have another 2 swings up towards 1.30 area before a C wave comes down. So those are the two scenarios. We're either we either have completed A or we're in the 5th wave of A, and then there should be a B wave up before another C wave down to test 1.25. So that's one scenario for the euro dollar, and I'll continue to follow that and let you know if the price action is confirming or invalidating. Here's a look at the pound dollar, which also is spending this week in consolidation as it tests this rising trend line and the 200 moving average in the daily time frame. It is also testing 1.55, which is this important power line. Used to be resistance, now is being tested as support. Okay, as far as Fibonacci retracement go, if we look at only this last swing, it came down to 50, trying to stretch to 61.8%. Okay, but from the entire swing, it's not even at 38.2 yet, but there's definitely some support here. Going to the 4-hour time frame, looking at the support area, here's a one possible count. We have 1, 2, 3. Either 4, 5. So looking at the euro, this may help you just select your preferred count for the euro, since the pound dollar looks like it hasn't completed wave 4 yet. Okay, and then there should be, but it could be A, B, C, and then we may be in a wave 5. Or we're continuing in this wave 4, A, B, C, D, E, and then a wave 5. In any case, after that, I'll be expecting 2 waves up towards the 50% area, maybe at most 61.8%. And after that, I would still anticipate one more impulse wave down. So that's similar anticipation for the pound dollar as to the euro dollar. And by the way, this is a flat pattern. In the euro dollar, it originally I was anticipating more of a zigzag, but it appears to also be in a flat pattern. Okay, so dollar yen continues to hammer at this 85 low. Okay, so this reversal signal last week is invalid. if today's close is where it is right now. Looking at the 1 hour time frame, this count is invalid now. 1, 2, 3, 4, 5, and ABC. There should be, and if there's a impulse wave after that, then I would be convinced that the dollar is ready to rebound. However, it's not. It's more likely to stay in ranging mode. So this is invalid. It's not showing any clear impulse waves, and therefore they're most likely just twists and turns in this bottoming action. So continue to observe. I'll continue to observe stalk this pair in the internals, see if there could be an impulse wave that is followed by a corrective wave and then another impulse wave. That would be a sign that the dollar yen is ready to rebound. The Aussie dollar pair is in an interesting setup. So in the daily, you see a possible head and shoulders formation if the market is able to break this 0.8850 area. And I've been mentioning this resistance here as a very key resistance for the bullish outlook. If this resistance breaks, then we are most likely just in a ranging action and unlikely to reach this previous high anytime soon. Now looking 4 hour time frame, so this was our count. Wave 3 up here, but wave 3 to complete up here, which is wave 5 of the internals. However, at the moment there's a decline, right? And it's testing this 200 moving average, but look at 0.8850, we may have a bounce from there, and then the market should continue higher. However, you see this momentum so far failed to be bullish, so it's not. It continues to consolidate, continues to be in sideways action. This is a possible head and shoulder, but until the market breaks below and confirms, the head and shoulder is just as easily a continuation pattern as it is a reversal pattern conventionally. So when you look at the RSI breaking above 60, it didn't break above 70. It doesn't seem like there's a strong bullish attempt, although there is one, and right now we have this positive reversal. So if, once again, this positive reversal is basically, if it stays above this 0.8850 area, there's a chance to rally towards this previous high. But if it breaks below, then we may have sort of sideways action instead. The Canadian dollar pair here in the 1 hour daily time frame looks like this. So we are in a congestion pattern in this triangle, hammering at the 82, 81 zone. So the support zone is a very significant zone that the market has shared as support for quite some time throughout 2010 and at the end of 2009. So here we are in a congestion pattern, so a breakout is likely, and that means possibly increased volatility after a period of reduced narrowing volatility. 1 hour time frame. Okay, so here we see basically this was our anticipated Gartley completion. If you looked at the retracement from there, from this head and shoulders, we were at 61.8%. Then we were anticipating 61.8%. The market fell short of that, but there was some strong bearish price action here. First there was this initially here, but then was not confirmed right away, and then this was a very strong bearish candle, engulfed pretty much even the middle pivot of this consolidation. So now we are testing this support here, rising support of this channel. Very strong price action warns me against respecting this support. However, we do see in the daily time frame that although we may have some further decline, that we are in a major support area. Also, you see some slight divergence forming. The problem is, you see the RSI has been staying below 55, obviously staying below 60, which is a threshold. So for the Canadian dollar yen to have a significant rally, it needs to break this declining trend line and come out of this bottom. Okay, that's it for the Canadian dollar yen for now. Look for a breakout in the coming week. That wraps it up for today. Make sure to visit FXTimes.com for your daily analysis and invitation to educational live events. Once again, I'm Fan Yang from FX Times, wishing you good trading.